Our guest notes that gold has been helping the TSX, but the S&P 500 has been suffering because it's got far more technology stocks. Let's get more on a diversified investment strategy amid market volatility and, of course, the looming threat of a recession. We're joined by Som Seif, founder and CEO of Purpose Investment. Som, great to see you.
Great to be here, Andrew.
We have consumers both sides of the border feeling pretty gloomy right now.
Well, they ought to be. I mean, we were just coming off this couple of years where, cost of living, cost of, goods was, kind of coming down. It was very difficult for a while, but it's starting to come down. There was getting relief. And all of a sudden, we've got an self-induced potential risk to that in a meaningful way. And, the reality is that people are going to feel that in the real world, but they're going to feel it over the next couple of months in a meaningful way. And I think people are saying this is sort of silly. So I think Americans and Canadians and probably globally, everyone is feeling this in a deep way.
Let's put up a 1 year for the S&P 500. It must be worrying Mr. Trump and his team to see this weakness in the markets.
Well, I mean, no question, when you start thinking about what's he trying to do, he's trying to, push this through at the same time, have an offsetting impact of lower interest rates. So, of course, when the Fed, who is an independent agency and is supposed to be making decisions based on the data and the reality of the environment, isn't doing what he wants to do, which is offsetting or creating a countermeasure to the tariff impact. Ultimately he's going to be aggressive as he is over the last couple of days. And he was, some time ago when he first announced the tariffs, he was saying, well, now it's your job, Powell, to cut rates, which isn't actually his job. His job is to kind of make sure that he is countering what is a most difficult environment, which would be a recession and inflation at the same time, which is a very tricky thing, as we know. Stagflation, which is ultimately one of the worst environments to be in, is one of the trickiest things for a central bank to have to navigate through.
Gold just on fire, it seems, partly because of a weak U.S. dollar.
Well, I think that it's, first and foremost, I think gold's been on fire for some time, and it's basically, chaos is its sort of best friend in many ways, but more importantly, when you sort of saw coming out of the Russian sanctions, gold ultimately became an asset that more and more central banks started to kind of pick up, and you started to see that sort of institutional central banking ownership. In the last, year to date, it's been more broader institutional investor, retail type of appetite, and all of that is in context and working together. And so, gold and I'd say non-fiat based assets are ultimately seeing a little bit of a, real focus as people look at alternatives to buying the US dollar, which is, of course, in a trade war, but also in a capital allocation, capital surplus environment where they're sort of, historically has benefited the US dollar and US assets in general. People start to take their money out of the US and say, where do we want to go? And in the absence of a good idea, gold becomes something interesting.
And do you guys, can you remind me, do you have an actual gold ETF on Purpose?
Yeah, we do. Our Kilo ETF, KILO, and our focus has always been on security and structure in gold, as you know, and we've done that. I mean, I go back to my Claymore days, and I think we launched the first Canadian dollar hedge gold ETF in the world, and so our focus has always been on how do you get access to Canadians to get access to really good gold exposure.
That's got market cap of almost $200 million.
Yeah, no, it's about 400 million total assets in the portfolio.
Okay, I was looking at the B class there, so maybe that's distorting it. And have you seen decent flows into that one?
So gold is up right now, of course, getting a lot of interest. Investors are making, there are people who are strong gold bugs, and then there are people who are casual gold investors, and we're back into the period where casual gold investors are saying, again, do I want to own US dollars? Do I want to own fiat anywhere? And gold becomes a really important strategic asset mix holding.
Let's have a quick look at Bitcoin, because we want to hear about a new crypto-related ETF from you and some other providers. So Bitcoin off its highs, I know, gaining a little bit today. What's the big driver for Bitcoin?
Well, I think first and foremost, Bitcoin has been going through a multi-year, call it, movement from fringe asset to call it more of a well-regarded or core asset in people's portfolios and in institutional mixes and all the rest of it. And that is just a sort of sequence of things. And actually the thing that over the last couple of months, as we've seen greater volatility in the markets, usually you would have seen Bitcoin have even greater volatility than the market itself, and in fact it hadn't. I think that's a good validating point. But second is it goes to the same theme as gold, which is, when you're looking at the risks of fiat currencies, US dollar, euro, CAD, anything, ultimately people are going to be looking for alternatives. And of course, that includes things like, gold, but also we'll start to navigate and gravitate towards things like Bitcoin and other, call it, assets that are divorced from the financial system in many ways. And that's one of the key benefits of Bitcoin. It's so unique in that sense. It's going through this, call it, social experiment that we're watching in our lifetime, and it's really powerful to sort of see it happening in real time.
You and 3 other asset managers have launched a Salana ETF. Now, we're talking here about a crypto coin that's the Sol, but it's processed on the Salana blockchain. So what exactly is this ETF investing in?
Yeah, so it holds actually the Sol tokens itself.
Okay.
And just like our ETH and Bitcoin ETFs are the same, which it physically owns and digitally holds the token, so it's not through any derivative or anything like that. That's a very powerful thing. It's a safe and secure way to own the asset. The most important thing is, if you look at sort of the sequence of things, you've got Bitcoin, which is sort of the first, but has a linear, more sort of social element to it. ETH, which is a more technology and infrastructure utility that is really about how do you build a multivariate principle of kind of the future of finance and future of, call it, tokenization. And then you have these, call it, alternative tokens like Sol and Ripple and others that are ultimately kind of guided themselves as trying to build an optimized to some component. In the case of Solana, it is about high performance, it's about speed. And they trade off ultimately one of the 3 prongs, which is you've got security, you've got governance, and you've got scalability. And what they do is they sort of focus on a little more centralization. So they've got security, but they have, of course, governance they give up a little bit, and then that gives them the benefit of scalability. And so it's better for high performance, high speed kind of tokenization if you're doing sort of trading, if you're going after sort of payments, things like that. That's the sort of benefit of it. Our view is that as you go through the sequence, you sort of Bitcoin is a really powerful asset. ETH is really building this, call it the best infrastructure. It's trying to build the best infrastructure blockchain. And then you want to have exposure, or for those who want to have exposure to the others, I think it's important to have a safe and secure way to do so. And that's what we did with with the Solana ETF.
Pretty arcane, though.
I look at it and say that it's actually really important. Look, investors, as you know, this is an area, as you go from fringe to core, investors are going to find unique ways to get exposure, and sometimes those can be difficult and hurtful. And our view is safe and secure ways is the most important thing. And investors are going to find their way to invest in these things, and you want to have the cheapest and the best products to do so. I think that's what we've always tried to air ourselves towards.
Som, thank you very much indeed.
Great to be here, Andrew.
Som Seif, founder and CEO of Purpose Investments. Coming up, traders